I'm Catherine Ross. I'm here live from the floor of the NYC with Jim Cramer. Jim, what's top of mind for you this morning?
Well, I think that you have to make some decisions. I think that you have to do some buying because the market's very oversold. But at the same time, it's not too late to sell travel and leisure. I was waiting for Marriott, which I knew was going to be bad, and was hoping that stock would stop because everyone knew it was bad, but it didn't. So I don't want to put a lot of new money to work. I think you put some. You buy the higher yielders, accidental high yielders, because this is a biological crisis, not a financial, and they'll have good balance sheets, and that'll work. And you, not in real estate investment trust, those are too difficult. But I genuinely think that it's okay to buy some tech, which is going to come back. And I think that you got to sell anything travel, leisure, and just decide, okay, look, if those bounce back, I missed it. We did a lot of work on about the 2003, 2004, and the transports went down about 21%. They're probably not done because the numbers haven't really been cut yet. So, I mean, you look at a Southwest, which is a great company, and no losses. I want to say, why pay this price? What do you know that makes it so that you're confident with their problems with the MAX, with the fact that they're Permian related? I don't really care that jet fuel is going down. I just say, why here? Why now? And the answer is, there's no reason.
Now, you made a point in your Real Money column this morning that you should stay away from the travel and leisure and the airline stocks. What do you need to see in order to get back into those stocks?
Well, I think that those are not what you want to get into. See, I think that this is time to high-grade your portfolio. Maybe you get a chance to buy J&J if it really comes down a lot, Lilly if it comes down a lot, and then the two that we really like, maybe AbbVie comes down. Abbott, maybe that goes to the mid-70s. It's a great company. It would be terrific. So I'm in that mode now. I'm looking at companies that will give me a good yield in an environment where treasuries don't. And I just buy more as I get more yield. And I think that makes sense. And it's methodical. I've been comparing the illness. You know, this is there's several phases of the illness. There's how easy it is to catch, and then there's the lethality, okay? So you have to deal with the first and the second. This is incredibly easy to catch. I think that the person in Northern California may have infected hundreds, we don't know. So that to me is like when you were growing up pre the great, not polio, fortunately it was born after polio, but during the great epidemics of measles and chickenpox, mumps, you just knew you were going to get it. The question was when. And you survived. Now, I think that the inevitability of chickenpox and measles is somewhat like this, but they didn't have the lethality. The lethality, though, for younger people is very little. So I think that the analogy works for those of us who were born in the 1955 period. Unfortunately, most people weren't. Now, it's an older time, people forget. But you had to expect, I mean, I had to take the polio, sugar cubes. You had to expect that you were going to get measles and chickenpox. You did not. You were hoping you didn't get polio, which is just devastating. But I think that if you just break it down and say the odds favor you getting it, and if you're younger, less lethality. If you're my age, more lethality. Then you're ready. And one of the things that is truly bothering me is the idea that that's still on the table. Forget that. We know it's going to not be good for you. So the question is, what, when you get better, is going to be good for you in your portfolio? I'm a portfolio guy. I'm not a doctor. I listened to the CDC. The CDC scared the hell out of me. So I went and bought all those things and got very prepared because they talked about a major interruption. So I have a bunch of pills, and I immediately check with my with my health provider to say, can I get 3 months just in case I get sick? So I bought a lot of Clorox, bought a lot of canned food, because CDC said it's going to be a major disruption in your life. And so what does that mean? I think it means that you got to be ready. And that's kind of like a hurricane. I mean, it's a hurricane. I'm trying to analogize the things that people understand. It's measles. It's a hurricane. And so you don't sell everything because of a hurricane. And you don't sell everything because of measles. And you don't sell everything because a percentage of people do pass away. Because you still want to, even if you're unfortunately that horrible group, like my father was, you can make decisions that can make it so that people 50 years from now, like if you look back at SARS, 2003, 2004, it was a great buying opportunity, except it was down 20% at the time. There'll maybe come a time when I do tell you that you should buy Marriott. It's just not here yet. But I am saying that right now, when I look at a Procter had a great quarter, but they said at their conference that things are going to be not so good. So now I'm thinking, okay, 110, 105. I hope. Now I hope obviously not to get sick, but I'm trying to stop conflating the sick. I want you to put it on the table that you'll most likely get sick and you'll most likely live. So put that to a side and think about longer term. Like you might have been worried 2003, 2004. Forget the actual indices yet. The indices aren't where you want to go. You want to buy high quality companies that have a 3 to 4% dividend yield where you're not worried about the balance sheet, and you pick. And then you want to have some techs that have a secular strong story, even if they're really high, and you stage your buys. Because the idea of selling anything right now other than your travel and leisure stocks is not right. And the reason why I'm focused on travel and leisure is that they will all have numbers cut. So you could say, well, why don't you sell some banks? Well, we did that already. We sold one of my faves, Citi. And I'm not wanting to sell. Those banks will survive well. JP Morgan, and I have a very big gain in it. We should have sold it, obviously, but we sold. How many can you sell? We sold Citi, JP Morgan, and Goldman. I want to build Goldman because Goldman's changing, and they have that Apple credit card. And JP Morgan, I'm wrong. I mean, I should have sold it, but it's such a great bank. I'm willing to take the wrongness of what I did.
Jim, we're seeing the Dow down about 592 points at 10:08 a.m. This week is starting to look a lot like it did back in 2008 at the financial crisis. So I'm wondering, is it for investors who are looking at safe haven assets right now, is it too late to get into them?
Well, in which one's the?
Any safe haven assets.
No. I like the safe havens. We're down. We're going to be probably oversold to the point of like -8. Now, in 2008, the oscillator failed you. But that was a financial crisis. I keep coming back to say this is a biological crisis. Biological means that the earnings are going to be cut. And so then the question is, how long will this last? The disinformation is terrible. We had a doctor, I won't mention her, but I said, look, how about if Gilead's drug? And she said, no, it doesn't matter. It has to be a vaccine. And I'm like, are you kidding me? I don't want to get hurt. You know, if I know that there's something that can be taken that will keep me off a respirator, you bet I'm happy. You know, I just want the measles. So I look at things and I say, balance sheet, dividend, not earnings sensitive because of a secular change. And that's my buy list versus the S&P. Look, the S&P will go down to a certain point when, you know, and not far from now, where if you have all cash, like my kids have all cash. Now, they are not, they're not dependents, okay, because they're older. They do their own thing, all right? But they have it's a really good example. They have a really nice sum. My dad saved really well. They have a really nice sum. He passed away in November 2014. He was still working hard. He had a big October at his box and bag business. And we have Generation Skip Trust. So my kids have the money, and I didn't invest it. Why? Because I thought the market was too high. Now they're on their own, okay? I can't tell them what to do. I certainly can't tell them what to do about anything. Good for them. They're on their own. But, you know, maybe they should be buying something. You know, they should probably buy, and they have all cash. There's a lot of companies doing well. So as David Faber said, I was a complete alarmist when the market was going up big. I was screaming that I did not like the market, that it was wrong, that it was crazy. Now that it comes down, I can't be as negative. That's what the jokers do. See, the joke, you know, the people, when I look at what happens in the market in my 40 years of investing, there are people who like the market at the top, and as it goes down, they realize they're wrong, and then when it bottoms, they sell. I didn't like the market at all. We racked up 21% cash. We still haven't put as much to work as we sold even this week, Catherine. We had that bounce on Tuesday. We sold a lot. I mentioned that we sold bank. We sold a lot of good stuff Monday when the market was down like 500. It was very painful, but all sales that we had made going in, we had made a lot of sales going in. And now what we're left with are things I really like. We don't have any of the travel and leisure stocks. Those are wrong. We kept an oil stock, BP, as I mentioned many times, because it has a really good yield. But the oils, I know people don't want to hear this, but I think the oils have lots of structural issues, and they also have issues when it comes to ESG and the new young managers. But, you know, I'm looking at a sign for Coca-Cola, and I'm thinking, ooh, maybe Coca-Cola goes back to where it was before James Quincy finished fixing it. And I would want to buy them. Maybe this is a time to get, like, say, 5 or 6 mad money stocks. Buy the S&P if you don't have any money in the market, and that's good. But if you still own some of the travel and leisure, you can use that to buy other things. And that's why I want you to read my Southwest Air piece this morning. Look, I was screaming when it was high, and now I am entirely Jimmy Chill as it comes down. And I'm not, as I talked to my friend Matt Horween, who was just my writing partner, we both agree that this is an interesting time to be buying some high-quality stocks that have good dividends, where obviously you leave a ton of room. But you don't know. I mean, there's a lot of ingenuity in the world. A lot of people always working on things. I didn't think SARS would be solved. I didn't think Ebola would be solved. Obviously, no one thinks this was going to be solved. The Chinese have been terrible and given us very little. The WHO has been miserable. But Dr. Fauci is the guy I listen to, and he pretty much says you're going to get it. And I'm ready. I don't want to get it. I don't want to be sick. But I accept that that's probably my fate.
Speaking of the coronavirus.
I'm doing everything to make it so it isn't, but I accept that it's my fate.
Speaking of the coronavirus, President Trump took the podium last night to reassure Americans about the virus, but he was also quick to blame the Dem debate and the Federal Reserve for the market's reaction.
Let's talk about that. The Federal Reserve, they'll have to cut. This is conflating financial crisis with biological. That's no good. It doesn't work.
So they have to make a move here?
It doesn't matter. We talk about the Fed. It's like if it was financial crisis, it would matter a great deal. It does make my thesis of buying those dividend stocks a little stronger. But the biological issue is what the president, I think, hate him or like him, has to be more concerned about. Because let's say you believe that the economy and the stock market are what drives a candidate to win. And Doug Yearley, the fabulous CEO of told me there's a pause in buying. I immediately called my wife. We were thinking about buying something. I tried to get out of it. Can't. I like to be commonsensical. If I can avoid a big loss, I always want to do that. And I feel like that the cessation of economic activity is going to drive weekly claims up, and that may increase the possibility that Bernie Sanders wins, which is very negative for the market and is another reason why people will sell. That's why I say don't start big. So hate him or like him, I think the president is completely correct that if you think that the stock market going down hurts economic activity, which I know he does, and if you think that jobless claims come up and employment starts getting not as good, it obviously increases the risk of the challenger, whoever it is. But that Bernie Sanders represents an existential threat to stocks. And you'd want to have all cash if he became president, because you probably, if you're wealthy, want to make it easier to be able to have redistribution and not have to sell if he gets the Democratic Congress. There's still so many checks and balances here, but we know that if Bernie had his way, he would like to be Robin Hood. You know, that's what he is. I mean, he calls himself a socialist. You know, I could call myself a Trotskyite. I mean, you can call yourself whatever you want. It depends on what you feel and what you say. And what he says are things that are typically associated with communists. That, again, people, that's not red baiting. You know, they have people who have studied communism know what communism, you know, if it walks like communism and talks like communism, it's communism. It doesn't matter what you call yourself a socialist. So I remember this from when I was a union leader, and I wanted the means of production to be owned by the workers. And I felt very strongly about that and called myself a capitalist. But when you study it, having the means of production owned by the workers is the fundamental tenet of Trotsky, Spartacist Workers' League. But I called myself a capitalist.
So last night, Microsoft put out a sales warning because of the coronavirus. Does this change your long-term view of Microsoft at all?
No, Microsoft's terrific. And I feel like that Microsoft, you buy some on that, because it's not travel and leisure. They're still going to use Microsoft's product. You're getting a chance. Now, Microsoft was at 120, 130, but that's a good example, Catherine, of if I liked it at 180, which I wasn't telling anyone to buy it, but if I liked it at 180, 190, I don't want to start hating it at 160, with or without the warning. Again, I always want to leave room for the idea that someone comes up with something, that the Moderna vaccine, I know everyone mentions vaccine and immediately mentions 12 to 18 months. We don't know. And the reason I say we don't know is because as recently as 3 weeks ago, no one thought that Moderna would be in a shape to ship the vaccine. So if you go back and rewind the tape, there were all these people who said, listen, it's going to take ages to get that in clinical trials. Well, that's not the case. It's already being used. So, I mean, everyone who said that was wrong. It certainly wasn't a good reason to buy, right, because there's other things in play. Gilead, their drug. The idea that the FDA would bless it in stage 3 trials would have considered to be lunacy not that long ago. But what they're using is saying, okay, well, listen, we've already approved it for other drugs, so it doesn't kill people. So now they're using it. So, but that's much faster. No one thought that the FDA would fast track it. Who knows what the FDA is looking at? So the idea, again, I have an inevitability that I will catch it. Inevitability that because of my age, I will be sicker than you. Inevitability that I have to be ready for it. That's what the actuarial tables say, and that's what the CDC says. And inevitability that I'm also going to be able to buy some stocks once I get better, hoping I get better, that will be good prices. And I'm huddling with the Action Alert team. I'm supposed to have a lot of meetings today. I canceled everything. Huddle with the team to be sure that we're on target. There's some things that we have that are being annihilated, but there are things that we have that we sold. You know, we sold UNH 280, okay, 290. And now Bernie being ascendant, that could take that stock to 210. So I want to be ready maybe at 200, 210 to buy some UNH. So I'm not sanguine about being sick. That would be masochistic. I am sanguine about the prospects that I will get through it. And when I get through it, I don't want to have bought nothing. Because when I get through it, the market will be too high and we'll get a V. It's very hard to look right now and think that we can get through it when we haven't gotten it yet. But we certainly, when you think about it, think about what happened with this gentleman in Northern California. Came down with it, went to his hospital, no provision, nothing done to make it so that it was anyone treated it like it was this disease. Okay, then. Went to the Davis Hospital, which is a very good hospital. I know that area well. I lived there. Was from Sunday, from the 19th to 23rd. Was not treated if he had it. We don't have kits, right? We don't. I mean, you can say, well, we should. And President Trump, blah, blah, blah. But we don't have kits. So that person was then diagnosed long after a period where it would be natural to assume that he touched or gave 6 or 7 people every day during that period. COVID gave him the disease, COVID-19. So now, all those people yesterday discovered that they may have it. And how many people did they do? So, you know, this is just a problem like when you were in grade school, where you had to figure out what the permutation would be, what the exponential increase would be. And I'm not saying that guy's going to give it to me. I am saying that there are probably many people who have community, they're talking about this community notion of getting it, and that your best hope, frankly, is something Len Schleifer told me, who runs Regeneron, which is that you want everybody to get it, and then next year you have herd immunity. And herd immunity is just not enough people get it. Now, there's a new theory that you can get it again. I don't know about that. I think that the Chinese have been lying so effectively, I can't tell. And the WHO is captive of China, and that's unfortunate. But again, I think the market's going lower. I think that you want to be picking high-quality stocks and selling the ones that are not. And there are a lot of those. A lot of these real estate investment trusts, you can say, well, listen, I want to sell them at Tanger, it yields 12, whatever. You know, anything that involves congregation of people anywhere is something to sell. Anything that involves travel's going to probably be grind to a total halt. Anything involves entertainment could be very problematic unless it's at home. And we just want to treat these things as if they're by rote natural. And maybe it'll turn out that Southwest will be the greatest buy in the world, but maybe it'll turn out that CVX will be a sucker buy. What you really want are things that are going to do well regardless. And I mean, I have my eye on Colgate. I'm going to meet with the team today to talk about Colgate. They just had a great quarter. There isn't anything in their product portfolio that you won't buy, even with this, and you'd be stocking up on it. And so that's intriguing to me. I didn't think I'd get it down here. So you have to take losses. You have to take pain. We're not used to that. The market was at a high last week. We're not really, we're oversold, so it's a little late to sell other than those particular areas. But I don't want to lose. I want to cut back on my risk.
All right, Jim, thank you for joining us today.
Of course.
Guys, thanks for joining. Now, Dow is down around 670 points at 10:22 a.m. this morning. We are now heading over to our Action Alerts Plus Daily Rundown show where Jim will be breaking down his latest thoughts on the market,
Yes,
more so than what you just heard, and the moves that he's going to make.
So here's something interesting. You got this, Chief, you got this. Okay, so let's start SIG. Okay, that's Signet. Okay, that's Signatures. They had an absolutely fantastic quarter. That's down today 8%. But at the same time, it involves shopping, and they have a lot of mall shopping. Well, I think people are not going to go as much to the mall because they're worried, okay? Then you have Tanger, SKT, and look at that. That has a 12, 13% yield, and it's without a doubt filled to about 97% capacity, but people don't believe, and it also involves congregation. So do I want to sell that here? I don't know. At this point, maybe you say $11, there's not that much downside. They have 97% occupancy, but look how I've been telling people to avoid that. It's down 4 today. And then you get Southern. Southern is 65. Good yield. Okay run, not great. A couple of nuclear plants they really screwed up. It's a good level to start. It's a good level to start. And so if you're just S&P, that whole exercise is, means nothing because we've all been taught to be S&P, S&P, S&P. I think these declines you can do S&P, but you're also looking for the Southerns. You want to buy some stocks that you could own for a long time. And we all have become convinced by people that we're too stupid to buy anything but the S&P, but I'm urging people to reject those chains and not be like I was. I was tracked in the dumb class for a long time and therefore felt I'm dumb. And you've been tracked in the S&P class, so you're dumb. And I'm trying to free you of those chains.
All right, Jim, thank you so much for freeing us of those chains. Yeah, all right, guys.
When they tracked me into dumb class, I said, wow, I'm stupid. It took me a long time to realize that I wasn't. Well, don't let them tell you you're stupid. Don't wait as long as it took me. But I understand that the market's going lower.
Speaking of the market going lower, we're now 739 points down on the Dow at 10:24 a.m. We are heading over to our Action Alerts Plus Daily Rundown show where Jim's going to break it all down for you. And of course, we're going to keep you updated live over on TheStreet.com, so head on over there. I'm Catherine Ross, and we'll see you tomorrow.